Hello and welcome to another update video about GALA. The price hasn't really moved since the last update. The price is consolidating below the horizontal resistance line, potential neckline for an inverse head and shoulders pattern. Left shoulder, head, right shoulder is due. So that B wave there could form the right shoulder in an inverse head and shoulders pattern, with a potential breakout above the horizontal resistance line due. But first of all, we need that right shoulder. I mean, it doesn't need a pullback for a breakout. It's just that if a pullback shows, this could be an opportunity area between 1.48 cents and 2.02 cents. And if the pullback is corrective, especially then, so it would need to be a three-wave move. I think a pullback is due at some point. Price action gets increasingly choppy and sloppy. But yeah, all I'm saying is if we see a pullback, then it will likely form a nice inverse head and shoulders pattern. So we don't only have the Elliott waves that also suggest that somewhat lasting or substantial low is formed here. No, it's then also an inverse head and shoulders pattern. So we would just get a little bit more confluence, additional signals and so on. So all I'm saying here is there is a resistance level, a possible breakout point at pretty much 2.8 cents, 2.82 cents. When we come down, then I would be watching the ascending trend line for a first early signal that a pullback is occurring. So I would like to see that trend line break as a first indication that, yeah, indeed, we have topped here in an A wave. We are pulling back in a B wave with structural support around the 2.06 cent level, Fibonacci support at 2.02 cents and 1.85 cents, then more structural support around 1.8 cents. Ideally, I don't even want to get it below that level, but okay, if it has to, then we've got still 1.68 cents and 1.65 cents, which was the breakout point in October. So there's plenty of support there. Only below 1.48 cents, the scenario of further rising prices will get very, very unlikely. Yeah, it would definitely reduce in likelihood then. At the moment, there is nothing unusual here. It looks like a potential bottoming formation here. It has really moved up too high to strongly suggest downside continuation. After this, obviously, it's a very long downtrend there, yeah. But yeah, basically just watching for a pullback. Then the next C wave higher could complete the larger degree A wave. Then we should ideally get another B wave and another C wave rally into this larger resistance area that starts at 6.2 cents, which is pretty much in line with the structural resistance here, which was struck in January this year. Yeah, I think we just need a bit of patience. Be aware that the structure of the correction there, that can definitely change along the way. We always have to be mindful and we have to be on high alert for wave count changes within corrections. This is likely not an impulse, but the C wave could form an impulse, so it could get quite aggressive there. But could also be a diagonal. So I'm just saying C waves can be impulses. Yeah, not much more to add. I think the support levels are clear. Invalidation point is clear. Breakout point is clear. And so it's just watch if the market gives us that pullback. If we get into that pullback zone, I'm quite sure I'm going to be able to do an update and let you know. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.